Good afternoon, Scott Riley, T3 Live. Welcome to today's recap. So came in today, market was down 4, 5, 6 handles, and looked like the same old story. You saw some news out of China, showing that growth is slowing there, which is, I guess, not new news, more of a reality check. Spanish yields are over 7, so there was pressure everywhere. But all in all, the markets took it in stride. We're still trying to hold the gap from the European summit, and I guess at this point, everyone's still, hoping that stimulus / rate cuts / whatever is going to help keep stock prices higher, but I guess they will until they don't. So the fact of the matter is, I just think less is more. We're in a summer environment. We had a nice push through July 4th holiday into the jobs number. We just retraced a little bit. The question is, was that the top? Do we see some commitment? And if you look at the chart of the SPX right now, there's two sides of a story here. You see one, this is the level that held. Okay, we held above the 200-day this entire time. Here is when we ignited. We ignited on the news that Europe was putting together the TARP, whatever. And then you had a slow, methodical move to the upside here that broke to the downside. This is when the oscillator was like plus 70, plus 80. And now we're trying to build another floor here. So the question is, does this hold? Does the 1340, 1345, 1348 area hold, which is really about halfway into this igniting bar. And as long as you hold half of an igniting bar, you still can't rule out higher prices. I know if people have a thesis that spreads are going to widen, here in America, we're going to start getting everyone dragged through the mud with the election, earnings season. But the bottom line is there are some trades and there are some things going on. If you look at Apple today, Apple was flat and it's holding up really well. Apple is probably one of the best acting high beta names right now. You had a few different buy prices here. Remember, this was the Friday when it ignited out of this last descending channel here. And then really, the pivot was when it traded through 590. And now look where we're closed around 613.89. You have a flag type pattern coming in here. It's not waiting for earnings. So A, you can't be shorted, and B, if you're trying to wait for a dip, you're not getting much of it. So I think a lot of guys went after it today. If you had to take anything home long, I would think Apple would be a name you'd take home long, because if we open up down, I think you can get a better opportunity to trade through this area if the market hangs in there. Your next point of reference here really is, it's like 620, and then you have the highs. And I think that Apple is a macro candidate, and it should make new highs in the year. It's just a question of can it do it during this quarter, or does it wait to the third, fourth quarter? And overall, it should be in your portfolio as a macro investment. As a trader, there's opportunity all day long. Sperling's had a lot of good conviction here lately. He's been actually leading the troops for this trade, buying every dip. I've been pretty much just actively involved, I haven't had as much conviction in that because I haven't had as much conviction in the market as him. Today there was a good trade in Facebook. It was set up. It came in a little bit at the end of the day. I wouldn't say, it's game over or a full-fledged reversal, but you had this outside day right here. This is when you added. This is when the underwriters came out and said nothing too exciting. That's why we had a little controlled pull-in. Held the moving averages. Today it tried to extend. We talked about 32.20. It did go into resistance around 32.90 and then backed off. So I'd say small sell signal, but not get out of the trade. If you're more of an intermediate trend trader, you could be in this and give it to 30.55. If you're just scalping it, you probably get out of it today, and hopefully you had yourself a nice trade. As far as some of the banks, pretty lethargic. JP Morgan last Thursday led them lower when it broke that wedge to the downside. Today went positive, showing a small reversal type strategy, nothing to get excited about, nothing to write home. But here you go. It's just showing you how you can maneuver a little bit. Here is this wedge type pattern that it broke below. I think Meredith Whitney was saying some negative whatever about it. This was your price to exit it or to get short at 35.50. Wide range bar down. Now it came into some bigger support, and it's trying to hold maybe. If the market really wanted to squeeze the shorts a little bit, there's no reason why going into earnings this can't get back up to 35-ish or so. So, trying to find some support there. That's what helped the spiders at the end of the day. I don't even think there's any other banks worth noting. Wells Fargo has been one of the stronger ones. That they haven't had any bad news as a macro investment. It's been more of a hold versus a trade, and it's still hanging in there near the highs, above the moving averages. Much different technical story than JP Morgan. This one has been much better than all the rest. So as an investor, you have a lot to like if you had to be in a bank with Wells Fargo. As far as like some of the laggard groups, the ag sector, still hanging around. You had a huge move off the lows, trying to hang in there. It's trying to hold this gap that was put in place on that EU day. It's real red. I would just be a little bit. I would have a little caution, or maybe just a tier 1, because it can fill this gap. This group has come a long way from the lows, and it's still somewhat of a laggard group. And once that crop report's out of the way, there's no reason why the shorts, stay pent up and scared, so to speak. You look at CF, hanging around, still above the moving averages. This and Monsanto, they were pretty much the strongest ones, or the ones we've isolated for investors to stay with, besides some of the lower tier ones. This one, I would say, as long as it stays above this 190, 194 area, you'll see some commitment to it. It's still above the 8-day. Monsanto, still very strong. If you had to be an investment, this is the one that held in the best during this little cycle here. It's now flagging again. This thing gets above 84. It could help the ags. OAH is one positive today, earlier than the market. It's it's like a bottom feeder type of trade, where it came off the lows and it's trying to hold higher. This was that little mini downtrend right here that it broke, so it's trying to hold above it. So if the OAHs could stay, just say, above this 35 area and prove to hold higher, perhaps it can get a spirited move like the ags, but it's been a weaker sector this year. XHB, still near the highs. The home builders are still leading the way, hanging in there. So you don't see a lot of things breaking down. I know that we had a bad jobs report. I know that yields are above 7%, but it does feel like, you take a look at these spiders. I don't know if we're going to have let's go to the diamonds, because I'm not getting the data on the spiders. No one's really running for the hills. As far as, remember last time, we had this upper level flag here, and then look at this wide range bar that just collapsed the market into support. Now you had a little bit of rising prices, and now it's trying to stabilize here. So it's almost like you have two gaps that are fighting each other. So if you don't want to be too heavy either way, you could just draw a line like this. If the diamonds start getting above this 127.81, you could see at least a gap fill from the jobs day, from jobs Friday. If that gets filled, that'll take some of the pressure off the bulls. And then here, this is the gap that's still intact, that the bulls are protecting from the EU summit. So it's like a tale of two gaps. You have this gap that's controlling it from the bullish side, and then you have this gap that's controlling it from the bearish side. Which one loses its steam or its power? We'll probably know within the next day or so. As far as the overall market composure, I follow IBD. It's just another tool that we use. 4 days ago, they went back and confirmed uptrend. And then we had a distribution day on Friday, and they did not go back to rally under pressure. So with that said, they're not abandoning it. They said the leaders are acting okay. So at this point, it's not time to just be a stubborn short. You could be a cautious long, and you could be a tactical short, but don't be a stubborn short that if we do hold this gap and go sideways, and some just say Alcoa comes out not great and it's up tomorrow and they price it in and they squeeze. I've seen crazier things in the market. And as far as other earnings, we're going to start seeing them later this week. So the question is, have we priced in growth slowing, or do we have further downside to probe? Where in the second week of July, there's a lot of summer left. Just keep it low. You make your money, protect it. Don't swing for the fences. A lot of singles add up, especially when the volume was like what it was today, which was just lethargic and not there. I know guys that didn't do one trade today, let alone guys that are banging their head, pulling their hair out because they're banging the keyboard all day long. It's a good time to work from 9:30 to 11:30, take your break midday, do something, go outside, get some fresh air. It is summertime. Come back for the last hour and a half and then see what goes on during earnings. But if you're going to sit here all day long in front of your computer screen and try and manufacture some type of move, that you think could happen in your head because you're getting delirious watching the tape so long, you're going to lose money, you're going to get in a hole, and then when the action's better, you're going to have to make it back versus, being in a better position when things start to speed up. And again, earnings season starting tonight, which I don't really consider Alcoa earnings season starting tonight. So things should start moving around, and we'll see some type of resolution to this intermediate range where the EU gap is being protected as well as the jobs gap. So we'll see who gets gapped. Anyway, with that said, just keep it light. There is action out there. Sperling has been really good. He's still holding a lot of positions. He's trying to stay with it. So if you want to have action, he is in his desk all day long. Make sure to follow him, and we'll all try and give you as much value as possible. Have a great day trading. Or actually, I'm kidding. It's Monday, and trading's over unless you're trading after hours. I know guys wanted me to put together a video, part of my recap on trading earnings after hours. Maybe I'll do that tomorrow as we get a little bit further into earnings, but no one's trading Alcoa after earnings. But we do trade Apple, Amazon, Google, Baidu, a lot of others that do move after hours. It's just there's an art to that too, because it's thin, it's hard to handle, it's very risky, but with that risk, there is reward. So, we'll do that another time. Have a good night, and I'll see you tomorrow morning with Brittany Umar. Take it easy.